Today is the day, the big day, right? But when you compare this to Bitcoin's monetary policy, well, it's completely opposite, okay? Look at where we are now. When Bitcoin was first released, the Genesis block, miners were making about 50 Bitcoins per block. Awesome. Then 2012 was cut to 25. 2016 was cut to 12.5. Currently, right now, a miner only gets about 6.25 Bitcoins per block. After 2024, the next halving, 3.1. Then you go to 1.5, and that's 2028. And then 2032, you're getting less than 1 Bitcoin per block. And then you keep going down the road, and then you realize, well, Bitcoin is going to become a lot more scarce in the future. The number that we have now, right, pretty much, I don't want to say that's all that there will ever be, but the future amount that's being released is very, very tiny, and it's only going to get tinier, tinier. This is the monetary policy of Bitcoin, to become more scarce, not to be more plentiful like fiat, like the USD and like the euro, like everything else that keeps inflating because there's more and more and more and more of it. Bitcoin is going the opposite direction. This is why Bitcoin, I believe, is the best way to hedge against inflation, and it will become the greatest store of value that we have. I honestly believe that is the case. There's nothing else out there that's like Bitcoin. Nothing. Anyways, so I want to share that right off the bat. What else is there? Well, of course, a lot of Bitcoin enthusiasm right now. On-chain metrics are extremely healthy, obviously, right? You still have someone like Cathie Wood, who believes they came out with this report in terms of how high they feel Bitcoin can reach by 2030, and maximum they predicted 1.5 million, and then I think the lowest was, I forgot what the lowest was, like 200,000, and mid was like 600,000. So it's like between 200,000 and 1.5 million. This is 2030. Okay, this is not like 2300. She's not talking about like 300 years in the future. She's talking about 7 years, Bitcoin possibly getting up to $1.5 million. I mean, just think about that, okay? This is a short clip. It's about 2 minutes, so let me play this. I think this is pretty interesting. Let me get this ready. Let me play this.
We know you're a long-term investor with long-term calls, but what on earth gets us to that bull case of almost $1.5 million per Bitcoin if a bank crisis doesn't?
One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. You'll find the building blocks of those price targets in our Big Ideas 2023. So ARC Big Ideas 2023, and they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. So not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets and small cap in the 80s and 90s.
There you have it. Basically, that prediction is based on institutions just diversifying just a little bit of their balance sheet, 2 to 6%. We're not talking about like expecting institutions to put 50% or 100% in Bitcoin like MicroStrategy. She's talking about just the big boys putting about 2% up to 6% into Bitcoin. And that will make Bitcoin rise to $1.5 million by 2030. Think about that. There's a lot of money out there, and there's a lot of money that these big boys hold on to. Just a sliver, a tiny sliver of that into Bitcoin can drive it up to insane levels. Basically, that's what she's saying. I agree, especially after I just got done talking about the monetary policy of the Fed versus the monetary policy of Bitcoin, right? It makes a whole lot of sense. Bitcoin is doing very well. We're at a 9-month high. People are getting excited once again. The greed level is rising up, right? So a lot of goodness happening right now. Very, very exciting time to be in Bitcoin and crypto. As for Bitcoin's current movement, I've been showing you guys this, and so many people are making the same charts. Basically, we are mimicking 2019. This is what happened in 2019 before a big rise up, a big pump, and this is where we are right now. Looking pretty similar, right? Coming off from bottom, and we're in this channel that we're about to break, and when it breaks, and technically we're already above that channel, but when we truly break it, guess what? Good things are coming. And what do I mean by good things? Well, the target zone right now for many is around 40,000. Some are calling 50 or 60,000, and some are calling $1 million. So it's somewhere in between all these predictions, okay? But if Bitcoin follows what it has done before with previous cycles coming off from bottom, we're likely to see a repeat of the same kind of gains that we saw before, and that would put Bitcoin right around $40 to $50 to $60,000 within a matter of months. That is what we're looking forward to, and that could very well happen, especially after tomorrow. Especially if tomorrow we get a 0% interest rate hike, it will be phenomenal, and we're going to see everything rally.